Good morning, friends. Today we will start with the last chapter, last unit of our FAR syllabus. That is FAR 9, right? And in this particular unit, we'll be covering the not-for-profit organizations and governmental accounting we will do. Okay. So first we will start with not-for-profit accounting, right? Now, before going into the detailed discussion for this particular topic, we would like to first of all explain some differences between a profit organization and a not-for-profit organization, right? Because until unless you understand the concept of not-for-profit organization, accounting for it will be difficult to understand, right? So we are going to discuss not for profit accounting, right? Now, when I talk about not for profit accounting, it is a bit different, right, from commercial entities whose objective is to earn profit for the shareholders, right? And the objective for not for profit organizations are to work for the purpose for which it is created, either providing medical relief to the society or providing education to the society, right, without any profit motive. So in profit organization, all the resources are used for generation of profit for the shareholders, right? Here the resources are used uh, for the purpose for which, or rather the objective for which that not-for-profit organization is created. Then generally the resources for profit organizations are contributed by the owners, and they expect something in return, right, from the business entity, that the business will operate and generate some profit for us, right? But in case of not-for-profit organizations, the resources are contributed by some of the contributors. They are known as members, and their resources are used for the objective for which it was created. It means they do not expect anything in return, right? So the we'll discuss point wise. The objective is not to earn profit for owners, right? Whereas in case of profit organization, the ultimate objective is to earn profit for the owners. The money earned or contributions or donations received by not for profit is used to pursue the objective of the organization, right? Whatever money we have earned, now how can we earn money, right? Basically I can do some kind of commercial activity, right? These not for profit organizations can do some kind of commercial activity, like I can organize a stage show by calling a big artist, right, where I can sell tickets. I can generate some resources, some money is earned, but that money earned is not distributed among its members. that money generated is used for the objective like providing medical relief or providing education, right, or creating old age homes for the elders, right. So ultimate objective is to pursue the objective. The ultimate purpose is not to earn profit for the investors, right. So um, basically contribution of resources by members, contribution of resources by members who do not expect monetary return, right. Contribution of resources from members who do not expect monetary return, whereas if it is a profit organization, then that particular shareholder or the owner will be expecting some kind of monetary benefits, right. So here is operating purpose is not to provide goods or services at a profit. Operating purpose is not to provide goods and services at a profit. It means suppose I am giving some kind of medical relief, so my objective is not to earn by doing the medical treatment of any person or by doing any by giving free medicine, right. I am not going to sell medicines at a profit margin, right. So but in order to fulfill this main objective, I can do some ancillary activities, some incidental activities, so that I can help more persons, right. So I can engage myself in trade, but the profit which I am generating from such trade is ultimately to provide services for the objective, right. Here this is absence of ownership, right. So there is no ownership interest, absence of ownership interest, right. Now it can be categorized, I just told you it can be categorized in many ways, right. And not for profit organizations can be categorized um, in the following groups, right. So it is like not for profits organization can be categorized in the following groups so that we can understand its accounting and reporting requirements, right. So like we have say healthcare organization, right. I told you to give medical relief, right. Healthcare organizations. Then we might have some uh, educational educational institutions. Like our institutions is not for profit organizations. We are a profit organization, right. Right. So educational institutions, right. Schools, colleges, university, right. And this one we have hospitals, nursing homes, etc. Right. Now, there are some voluntary health and welfare organizations like United Way, Red Cross, Greenpeace. Like in India, we have old age homes, right? There are so many organizations, right? Those who provide voluntarily health and welfare. Now, apart from this, we have other and not-for-profit organizations like your institute, AICPA, right? This particular organization is created to carry out accounting profession in US. Like in India, we have ICAI, right? So, like we have museums, libraries, labor union, right? So all these are like not-for-profit organizations, but these are not covered above, right? Mm, so we have other organizations like we have museums, libraries, then we have labor union, then we have AICPA, professional organizations, all this, right? So we have understood what is not-for-profit organization, right? And how it is different from normal profit entities, right? Now, what does it not include? So, not for profit organizations exclude all investor owned entities, right? And entities that provide its owners benefits directly and proportionately, right? So not for profit organizations exclude all investor owned entities and entities that provide its owners benefit directly and proportionately. Now there are some governmental organizations, those who also work for not for profit, but these are not covered by FASB rules, right? Like in my first introduction, I have told you that it is Financial Accounting Standard Board rules, right? US GAAP. But here, the rules for governmental organizations are being prescribed by GASB, Governmental Accounting Standard Board, right? So that we will cover when we do go for governmental accounting. Right now, we are into not-for-profit not-for-profit organizations accounting, right? Now, if you see the blueprint of your syllabus, it is in area 1. So area 1 was like you have financial statements of profit entities, you have financial statement of not-for-profit entities, and you have financial statements for governmental organizations, right? So these governmental organizations, right? So they do not follow FASB codifications, right? So they will be following GASB rules, right? Which I will teach you when I go next. This is the second part of this particular unit, FAR 9, right? So you need to remember one thing. So this is like point number 7. So we have governmental not for profit organization follow Gatsby rules, not FASB, right? So this is you need to remember, right? Now, when I talk about financial reporting for not-for-profit entities, right? We have done it in our plus two level, right? Because in our plus two level, this topic is there, uh, NPO, right? Not-for-profit organizations. So in that we have learned, we used to prepare balance sheet, we used to prepare receipt and payment, we used to prepare income and expenditure, right? Remember? But as per this US GAAP, so when I talk about this financial reporting for not for profits organization, right? Now the ultimate objective is to present basic information, right? Like how much you have collected and how much you have spent it, right? And these are some tax exempt organizations, right? They do not have to pay income tax. Like in India, we have a rule that if the organization is spending 85% of its collection for the purpose for which it is created, then in that case it is a tax exempt. So you might have some taxing norms for this particular not for profit organizations, but this is basically a tax exempt organization, right? So the primary objective is to present basic information on resources generated and expended, right? uh, Use full accrual basis of accounting, right? We are going to use full accrual basis of accounting. Now what are included in this? So we have statement of financial position. This is basically balance sheet. And then we have statement of activities. We have statement of activities. This is like income statement, right? Then we have statement of cash flows, right? So this is cash flow. We have already done, right, in the last unit of R. So if I remember, this is my income and expenditure account. Income and expenditure account, and this is receipt and payment account, right? Then normally we have notes to financial statement, right? And then we have one separate statement of functional expenses. right? We have a separate segment statement for functional expenses, right? Where we show expenses nature wise and function wise, right? So you can make this a part of activity, or you can show it separately, right? So we need to do it separate statement of functional expenses to report expenses by nature and function, right? So you can either show it on the face of statement of activity, right? uh, it can also be shown either on the face of SOA or as a schedule to notes, right? So this is how we are going to show our information, right? Now what I will be doing, I will be taking each topic one after the another. That first I will explain you how to prepare balance sheet, then I will go for statement of activities, then I will go for statement of cash flows, right? So like this we will move on. Clear? So I have made it very clear that it is not for profit creation for the shareholders, right? This is there is one purpose for which these organizations will be created. So whatever money, whatever profit you generate, you have to use it for that particular purpose, right? So I guess this is absolutely fine with all of you. There should not be any doubts related to this. Okay. So we will just go slowly because we are into the last unit of this far. So I don't want to just speed up. Neither we have done it in the past. So just slowly and slowly we will do it, because from this a good amount of questions you can expect, right? So the first discussion will be our statement of financial position. Now, you know marshalling of balance sheet, right? We have done it in our plus 2 level. Basically, how you are going to show your assets and liabilities. In financial position means this is balance sheet. So here we show all the assets and liabilities. So it can be shown on the basis of permanence. The most rigid one will come on top. Like if I talk about assets, the one which I'm not going to sell, like land, building, plant, and cash will be in bottom. When I talk about liability, it is like share capital, because that amount is to be repaid only on the liquidation of the company. So this is on the basis of permanence. But if I talk on the basis of liquidity, then cash will be on top, and current liability means the liability which is payable in some time, that will come. So when I talk about this financial position, so what is reported in this financial position? Number one, total assets, right? We report total assets, and we follow order of liquidity, right? We follow order of liquidity. It means cash will be on top, cash and cash equivalent will be on top. Then we have to report total liabilities, order of nearness of their maturity date, the one which is payable in next few months, right? Which has a maturity in the next few months. And then we have total net assets. Basically, it means the corpus. This is the corpus. This is the capital fund, we say. Right? We call it as general fund. When you used to do NPO in +2, so we used to represent it in this way. The corpus, the capital fund, the general fund. We cannot call it as capital and share capital because this is not owned by any particular member. Suppose we group of 10 persons, we come together and we think, okay, fine, every month we will contribute 2,000 each. So each member will contribute 24,000 a year. So 10 members, so 2,40,000 we have contributed. Now whatever money we have collected from all the members of the society, now what I'm going to do, we are going to feed some poor people on the street, or we are going to give some clothes to them, or we are going to educate their children, right? So with that money which we have collected, we will spend it for the purpose for which we have created our organization. It is not like that you have contributed 24,000, so at the end of the year you will get 10,000 return on that. No. The ultimate objective for which it is created, we will spend this entire collection for that. Then what I am going to get? I am going to get some kind of peace, some kind of blessings, that I have helped so many students to get education. I have done the medical treatment, I have done the eye treatment for round about say 20 persons, right? This is the mental satisfaction. It will be regarded as part of my donation or whatever you say, right? So these are the items that we need to report in financial position, like total assets, just below that total liability if I maintain the vertical format, and then below that net assets, right? Now when I talk about net assets, means the corpus, right? Now whatever funds this organization has collected or generated, maybe members have contributed something. Suppose there are 10 members, each have contributed say 10 members, each has contributed 24,000 per annum. So we have collected 2,40,000. Now with this particular small amount of money, we will be able to help only few individuals. Our vision is big. Then we might approach some Tata, Birlas, Ambanis, those who might give us some donations. So these are contributions done by the members. Now Tata can help us, or even Ambani can help us. Okay, fine, go and build an eye hospital. So the money which they are giving us, they are imposing some restrictions. So whatever funds you have, either it is with restriction or without restriction. Now these restrictions are imposed by the donors. Now if it is with restriction, then in that also we have whether it is temporary restriction or permanent restriction. right? So the donors have a good role to play in the financial reporting of this uh, not-for-profits organization, right? So basically, if I talk about uh, if I talk about net assets presented are classified as without or with donor restrictions, right? Depending on donor imposed restrictions, right? So there are some unrestricted net assets. You have net assets without donor restrictions. You have net assets without donor restrictions. So we call it as unrestricted net assets. That is UNA. This is UNA. Right? Now internally we might frame some policies that we are accumulating funds for 3 years, and after 3 years of accumulation we will spend it for this purpose. So this is some kind of designations that I have done, some kind of restriction you can say, but it is imposed by the members, which can be altered at any time if not for profit organizations want, right? If the members decide, okay, fine, forget about this accumulation, let us spend it. The only restriction which we are talking about is donor imposed. Suppose all the members have contributed 2 lakh 40, so we have decided, fine, 2 lakh 40, 2 lakh 40, 2 lakh 40. For next 3 years, what we are going to do, we are accumulate funds and then we are going to build an hospital. This is not donor imposed restriction. This is internal policy which I have framed for accumulation of funds, right? So in these type of cases, it is regarded as unrestricted net assets. This is not restricted net assets, because restricted net assets are those which are donor imposed, right? So this is net asset without donor restrictions, right? Then we will talk about net assets. Then we will talk about net assets with donor restrictions. In this, we have two categories. Temporarily RNA means restricted net assets, right? And then we have permanently RNA. So this is tRNA and this is pRNA, right? So net asset is first classified between without donor, with donor. Without donor is UNA. With donor is RNA. In RNA also we have two, tRNA and pRNA. Right? Is it fine? I guess this is absolutely okay with all of you. So these are donor imposed restrictions. Either these expire by time or fulfilled by action of not for profit entities. Right? So these are some donor imposed restrictions. Right? Donor might tell, okay, fine, after 2 years you can spend it. Or you can spend it for only cancer research. Or you can spend it for buying eye equipment testing machine. Right? So either it expires by time or for the purpose for which it is has been utilized, or some purpose use is defined. On expiry, tRNA becomes UNA. Always remember this. On expiry, tRNA becomes UNA. Right? It is also donor imposed restriction, right? NFP cannot spend but invest these resources, right? Do not expire by time or do not expire by time cannot be fulfilled. So these are some endowment, these are known as endowments. We call it as endowments. Now whatever income we have generated, like interest on these investments, that you can use. The objective is not to use the money which I have given, rather you invest that, and every year when you get that interest, so that you can use. So income income generated from PRNA is either UNA or TRNA. Right? This is very, very, very important. Okay. Shall we move ahead? Right? So I'll just show you after we finish all this discussion. I'll show you the financial position of a particular NFP, right? But once we finish of this balance sheet part, and then activity, and then cash flow, right? So next is statement of activities. Statement of activities. Right. So this balance sheet is very simple. We will list out all the assets, and then liabilities, and then net assets. That's it. Like we have all the assets, cross cross cross, so we get the total of this. Then we have liabilities, cross cross cross, then we have net assets, right? In this we have two sections. One is without, then we have with. We can also prepare comparative for 2 years. Say this is year 2 and here we have year 1. Right? So there is nothing much to understand in this, right? So when we do MCQs and SIMs, we'll come to this, no problem. So now we will discuss this statement of activities. Right? So basically it will represent my change in asset. Right? Like suppose my net worth was 1 crore and at the end of the year my net worth is say 3 crore. What does it mean? That 2 crores I have earned during the year. So this statement of activity basically reports the changes in the total net asset, right? So what does it do? Reports the change in total net assets, right? Now when we talk about the change in uh, net assets, so we need to note separately identify change in net assets with donor restrictions and without donor restrictions, right? So basically the amount of net profit will represent my change in net worth, right? So this particular change in total net assets we have to identify separately for UNA, TRNA, PRNA separately, right? Now what are the different line of items that we particularly show in this statement of activity, right? So first we show revenue and gains. Like we have contribution received from members. So this is my revenue, right? So the different line of items for this statement of activity, we have first of all revenue oblique gains. This is the first activity which we have, right? So what all included in this revenue and gains? Basically, I told you in this statement of activity, whatever change, it represents change in net assets. It is with donor restriction or without donor restriction, right? So here also, when you report these revenues and gains, so we need to show the increase in, because of revenue the total net asset will increase, and because of expense it will decrease, isn't it? Either we can do revenue minus expense, the net result, and then accordingly I can show the net change. No, it's not like this. Due to this revenue, net assets will increase. Which net asset? Without donor restriction net assets or with donor restriction net assets, right? So report as increase in net assets, right? UNA, TRNA or PRNA, right? Depending upon what type of restriction has been imposed, right? Now what comes under revenue? It is like contribution from donors, we have investment income, right? We have contribution from donors or it is investment income. Right? Now if you receive some non cash contribution, like you have received some property, so for non cash contribution what will happen? We will record it at fair market value, right? So property received as contribution recognized at fair market value, right? So these are some important points that you need to note. There are some donated services, right? Now I have received some kind of service. If I would not have received it, in order to avail that service I must have paid for it. So those donated services will be included as revenue. Right? Investment income will be considered net of investment expenses. Right? So this is my first section of statement of activity. Now there are some net assets released from restrictions. Like I already told you, there are some donor imposed restriction that you need to use this money for cancer research or buying any equipment for eye testing. So once that purpose is over, what I do? From TRNA it moves to UNA without donor imposed restriction, unrestricted net assets. So here you need to show, if something sort of this happens, then we will decrease TRNA and increase UNA. Right? So what I am going to do, leads to reduction in TRNA simultaneously increasing UNA. This reclassification will happen only for TRNA, not for PRNA. Reclassification happens only for TRNA, not for PRNA. Right? If amount is received for acquiring non-current asset, then amount is released from TRNA only when such NCA is placed in service. Right? Now, last but not the least, when I talk about expenses, remember one thing, PRNA can never be spent. I have already told you. It can only be invested, and investment income can be either TRNA or UNA. Even TRNA cannot be expensed because TRNA is either expiry of time or for purpose for which it is used, some specific purpose. So when TRNA expires or you have spended it for the purpose for which it is created, so first you will go for reclassification and then from UNA you will spend it. So when I talk about expenses, it is always report as decrease in UNA TRNA is spent first, release the restriction classify as UNA and then decrease UNA. First we will do step line 2, this one, net asset release from restrictions, and then I will decrease UNA. PRNA cannot be spent. Expenses can be classified by nature and function. I told you na, either on the face of statement of activity or in notes or separately. So if I have to explain you UNA, TRNA and PRNA, if it is revenue, this will increase. In fact, all will increase. If it is released, this will increase, this will decrease, and not applicable. Right? If it is expenses, it is decrease, and I will do one thing, I will just mark it. It can never be spent it. Right? And expenses can only be shown in UNA. I guess this is absolutely fine. Right? Is it fine, everyone? So this was your statement of activities. Now we will be talking about statement of cash flow. In statement of cash flow, I have got nothing much to explain because This is quite similar to what we have done in profit entities, right? There is no such difference in this, right? So let us talk about statement of cash flows. Then we have statement of cash flows. Now here also we have this operating, investing and financing, right? We have operating activities. We have investing activities. We have financing activities. Now when I talk about investing activity, proceeds from sale of asset oblique investment. This was normal. In case of profit entities also this was it. Acquisition of asset oblique investment. Sir, this is quite simple. Sale of asset oblique investment and acquisition of asset oblique investment. In profit entities also it was investing activity. So there is no such difference in this. So basically these are related to asset transaction, right? And financing is specifically related to liability transactions. Right. Now when I talk about liability, see any kind of contribution that I have received, is generally is an operating activity, right? So what I will do, contribution received. So contribution received is generally an operating activity, but if contribution is received, right, for a long term purpose, right, then in that case it will be financing. So contribution received, that is PRNA. This is purely financing because it can never be spended. Contribution received, that is TRNA. For long term purpose. Acquiring PPE, right? Borrowings, like I have taken a loan, repayment of principal, all these are financing activity, right? So this is, we have contribution received UNA, we have contribution received TRNA, not for long term. This is not for long term, right? Expenses paid is also operating, right? Investment income, dividend income, clear? Right? This can be done by direct method or indirect method. Remember, reconciliation is must. commercial entities, right? But here it is optional. Reconciliation is must for commercial entities, but optional for NFPs. Right? So that's it from today's session. What I'll be doing few questions, and then I'll be moving to the remaining topics of this chapter, like what is the accounting entry we pass when we receive contribution, right? What are the accounting entries we pass when we receive some kind of donated service, right? Or some kind of donated materials or property received, or how we do accounting for donor restrictions contributions, right? So all those things we will just explain you in the next session. Further we'll also discuss there are some endowment funds, right? Like for PRNAs, right? It is endowment fund. And we will also discuss few items for colleges, universities, educational institute, how they prepare their statement of activities and all. Okay, so thank you so much.